oh, why don't you let people have lower anti-money laundering requirements?
Yeah.
It sounds terrible.
Absolutely. So what's the next edition of blockchain or the next evolution?
Well, like I said, it's going to end up like this. So they went into the regulator and was like, here's what I'm doing. How can you help me? And the regulator said, we can't give you legal advice. You should get legal advice.
What are they going to be looking out for in terms of the courses they can do to learn about this? Or is it there's just too much of a gap between traditional education?
No, it's not too much of a gap.
No, but is it creeping down into...
No, it is.
Is it? Yeah.
Well, that was one of the reasons I wrote my book was because there wasn't a book for it. So...
But what does all that mean for the blockchain evolution and stablecoins and tokens and crypto? Is that all will stand alone? It's just
that's always under attack. That's one of the most fascinating things about crypto networks is because they're open, they're constantly under attack. So smart contracts need to be built to essentially airline and nuclear reactor code grade because it's going to be attacked the second it's put out there. So if it's got any vulnerabilities, it's going to be exploited. And that's interesting, right? Because on the one hand, you're going, I'm dealing with things which can be under attack all the time. But on the other hand, you know that they're essentially under attack from the second they're launched. So if they are still around after a while and surviving, they're battle hardened versus the traditional way of IT was build a giant wall around your systems and then it doesn't really matter how bad they are internally because you've got a big wall to keep the bad guys out. Crypto is the inverse. Your code has to be amazing because if it's not, everything will be stolen. So it totally inverts the incentives and means that people have to be really, really, really careful on how they run their code. And that's made people like banks very nervous because if you can steal the value because of a mistake, and historically they protected themselves with a barrier and the code inside didn't need to be amazing, it could have all sorts of problems and it just doesn't matter. And suddenly they're in a world where the code matters a lot. It's a very big change institutionally to do that. And even, code that's been out there. There was a network where AI discovered an exploit that had been sitting there for 10 years. And it was a privacy coin, Zcash, and the price plummeted after this news that there was an exploit and it was patched by the team. But then they had this problem of trying to figure out, it would have enabled people to mint an unlimited number of new coins. But because it was a privacy coin, it was a bit hidden as to how many there were. So suddenly people didn't know, was this enforced maximum supply actually real? They figured out a very clever way of doing it where people were putting their coins through another piece of software and they could work out the total hadn't changed. So no one had hacked this exploit, this little exploit in the code over the 10 years that it existed. Or it wasn't quite 10 years, it might have been 6. But AI is finding problems fast, and that's dangerous. But I think there's a difference between, say, legal file information that there's no reason why you might want that sitting on internet accessible computers for years, or even recordings of discussions with clients. Because so many people are using AI bots, and it feels like a rich environment for litigators. But also someone stealing it from a law firm to get some commercial advantage feels dangerous. So even having these things reduced to, it just prints it out and it's put into a file, feels safer in a lot of ways. And still frustrating, though, because the tech side of me is like, well, that ruins the efficiency. But we literally might have some weird world where, okay, if you need to do something, you could drop that file in a scanner and bring it back to digital life, or you move it offline onto some storage medium and physically put it somewhere so it is disconnected from a network. But I think the blockchain networks are money networks. They can never really go offline, just like the banking networks can't really go offline now, because if they do, there's huge problems. If occasionally FPOS goes offline in Australia, it's a disaster.
Yeah, absolutely. Cause of a recession.
Well, yeah, what happened? I remember being here when it went down once, and the coffee shop just literally had a pad of paper, and they said, "Sort us out tomorrow," because it was just the old school. Everyone to do business had to trust the customers, and thankfully you were going to your coffee shop enough that they knew you weren't going to rip them off, and so you just pay them, sort it out later on. And that kind of works for a little bit, but those kinds of things break down fast.
Absolutely. So there's another thing going on as well, as regulation has been starting to creep in by government here, and I think you mentioned to me earlier the Genius Act. So we've got the Genius Act and then a DAF Act here.
So the Genius Act in America is for stablecoins, to say, right, if you want to issue stablecoins, here's a way to be a regulated stablecoin issuer. So everybody knows that a regulator has checked your reserves, checked your processes, make sure the money's there. Then there's the regulation of exchanges and digital asset service providers or virtual asset service providers, and Australia's moving towards having AFSLs for all the exchanges. I was, funnily enough, on stage this morning with Lee Eaton from Independent Reserve, and they went to ASIC in 2016 and said, can we have an AFSL? And ASIC said, no. They said, can we have a letter? And ASIC said, sure. I gave them the letter saying, you don't need an AFSL to do what you're doing. And they have that, they keep it in a safe, and they're very proud of the letter. I've seen the original. It's a wonderful thing. They love that story of saying, okay, and now they're going to get AFSL because the rules have finally worked around to accommodating it. It very nearly went in the direction of having market licenses for exchanges, which would have been a disaster.
Okay.
Because there's no real reason for a crypto exchange to have an ASX level markets license, but Treasury decided a normal AFSL, similar to an OTC derivatives AFSL is a good example, right? Not the same, but similar.
Yep.
So you actually see, a lot of the derivatives providers have crypto wings now because fundamentally the business model and how things are traded is relatively the same. So there's a lot of similarities in the risk and a lot of similarities in how they can be managed. Obviously a lot more cybersecurity on the crypto side. But that licensing process in Australia is starting. In Europe, MICA has been around for a long time, and there's a hard deadline coming up that if you don't have a license, you have to shut down. It's going to be very interesting when that kicks in, I believe, on 1 July, because a lot of crypto exchanges, if they don't have their licenses and they're still processing a lot of them, may have to close. So it wouldn't surprise me if they do an urgent extension to say...
Okay, give them a bit more time.
And I always think it's bad law to say if you don't have a license by this day, you have to shut down. They always should have, if you haven't applied for a license by this day, you have to shut down, because then the pressure's off the regulator.
Yeah.
If they need to take a year to do the licenses, the status quo doesn't change.
Yeah.
And so there has been this period of time for people to apply and get licenses in Australia as well. They've kind of got a similar issue of the grandfathering, with a bit more of a harder edge coming. So Australia will be moving towards that point of regulation. And the big question mark will be, how will ASIC enforce that?
Yeah.
Will they take a model of, you've got one foot over the line, we're going to cut your toes off, or will they take a model of, excuse me, your toes are over the line, would you kindly move them back and perhaps let your customers know that your toes were over the line? Historically, they've been more towards the former model, and they've certainly had a number of lawsuits against crypto companies. They have about a 50% win-loss rate, which is not great from a regulator going in. You would like to see your regulator hitting like 70s or 80s.
Yes.
Similar to, America had a lot of regulation by enforcement as well. So it's very interesting. But America's gone in the direction of saying most of these are not securities. They're really commodities. Australia has gone in the direction of saying we're not going to say these are securities or commodities or financial products. We're just going to regulate anyone dealing them as if they are, which is kind of elegant in a way, right?
Well, yeah, because they're presumably just looking at the substance of what's happening, and people being misled, or people being ripped off, or they, is that the sort of thing it's trying to protect against?
Well, I think that for exchanges, it's about saying there's a certain standard.
Yes.
Licensing, really licensing is, it's always about a standard. I mean, it's not that you must ask the government for permission to have a driver's license. It's about showing that you can drive a car without crashing into a brick wall.
Yep.
And then you're trusted with a license unless you do something naughty and it's taken away. So thinking conceptually about, from just a first principles, why should, I always like to say when you use the word government, replace it with those guys over there, because it helps you think about how it should work conceptually. Why should those guys over there have to give you permission to do this thing?
Yep.
Okay. And the easy answer is because the people you're dealing with need a third party to vouch for your standards that you've met. Yes. That makes sense.
Yes.
And those guys over there say, yep, we've tested you, you've met the standard, you've had the audits, you've got the processes in place. We know that your pricing and order book will be honest. We know you have ways of keeping the assets safe. You're touching other people's assets.
Yeah.
A good touchstone in Australia is if you're touching other people's assets and holding them for them, even on a debt claim basis, then you probably should have some kind of regulation around you because it's other people's stuff.
It's fiduciary relationships and all.
That's exactly it.
It's contractual and fiduciary, and
And a bunch of exchanges had in their T's and C's, and I wrote some of them. When you give us your stuff, you just have a debt claim, and if we go bust, you have a debt claim, and we are not holding anything for you on trust. And contract law allows that. So you could contract out of being, because it was unregulated, out of being a fiduciary. So part of the Australian change is, of course, to say, well, if you're an exchange, you're going to hold your client's assets on trust.
That's the law.
Yeah, which is a big... Japan put that in after a very spectacular collapse in there. And when there was the massive FTX collapse, the FTX Japan, they all got their assets back because they're all held on trust. unfortunately, all the other FTX entities around the world were generally not holding things on trust. So problems.
So as this new licensing is designed and it's moving in, it's sort of inherently validating stablecoins and validating crypto exchanges.
That's certainly the hope, because there is still a lot of banking challenges for crypto in Australia.
Yep.
And I can talk about it more being out of Australia now, because a lot of people in Australia are honestly afraid to raise it, because they're afraid if they raise it, there could be a debanking issue around their business. So there's still a lot of challenges getting banking. Because remember, even 30 years ago, businesses could survive on cash, but internet businesses cannot survive on cash.
No.
They need their banking to work. And so there's been friction that's been slowly coming about. And as part of my work with the Digital Economy Council, we had roundtables on debanking to try and see how it could be solved and demonstrate to banks that this was a safer, more traceable system that actually has less risk of fraud. And if someone stole money, you could trace them. Okay, you might end up finding out they're in a foreign country, but you can at least trace where they are.
Yep.
And that's been a really long journey. So the banking side is challenging there. But you're right, licensing so that the banks can be confident that an exchange has a standard that they meet. Hopefully will make the banks a lot more comfortable to say, yes, we'll bank you because we know you meet some standard.
Yeah.
We don't know, otherwise we just don't know. You could be spending everybody's money on hot dinners and then go broke and everyone's lost their money, and we, the bank, get sued by people trying to say we should have somehow taken more care. So I have sympathy around that for the banks who are trying to balance a risk appetite. And then on the flip side, I have concerns that if you don't have banking, you are locked out of a huge part of the digital economy. So banking feels more and more like a utility than a privilege. And certainly the man on the street does not consider banking to be a privilege. They consider it to be near on a human right at this point. But the legal position on it does not line up to that, because it's all private. And we don't have, Commonwealth Bank is no longer owned by the government. You don't have government banks that could say, we don't care who you are. You can have an account, even if it's a limited account. Because if you've been convicted of fraud before, maybe you shouldn't have an account that has unlimited transfer rights. Maybe you should have some limits.
Yep.
But banks don't take that position. They don't say, we're going to give you an account that just has a little bit of payment power. They say, if you go over a number that we'll decide internally not tell you, we'll ask questions because we're supposed to. So it's a very, very tricky problem. But part of that might be driving people into more crypto solutions, because those problems don't exist in crypto, because you're not dealing with an intermediary who has these concerns. You're just able to deal with your money. And we found out recently UK banks had been freezing payments to FCA-regulated exchanges. So on the danger side, in the UK, you've already got licensed crypto exchanges which still have banks blocking payments going to them. So an advocacy group called Stand With Crypto very cutely in the last week put 2 giant blocks of ice with a whole bunch of pounds in it.
I think I saw
dropped
that.
them. Yeah, it was very cool to say
Yep.
the banks are freezing your money. So they're taking that, going direct to retail, saying, because people have a view. And when I've seen people have debanked or frozen assets, they get really angry. And there's a great video online of a guy going up to the banks. I urge your viewers to find it, where he goes in and they ask for a bunch of cash and they say, what's it for? And he just says the most inappropriate things just to troll the tellers, because they have to ask because of anti-money laundering.
Yep.
But they just write down what the answer is, and it's very funny. They still give him the money. That's what's so hilarious. And he's poking fun that we have a system where people are questioned, but who knows where the answers go, and does it actually stop any crime at the end of the day? Well, that's a different podcast.
The friction between the old institutions and the new digital economy.
Yes, and anti-money laundering, right? That became a massive thing after September 11 and the Patriot Act in the US. That's where it really took off. Before then, it was still a bit of a challenge for a lot of banks to do and people working with banks, but it wasn't terrible. But now it's become bigger and bigger and bigger with less actual tangible outcomes. And at some point, that will need to be looked at by governments of, is this fit for purpose? Unfortunately, it's almost a third rail, because if someone says, oh, why don't you let people have lower anti-money laundering requirements? It sounds terrible.
Absolutely.
But if you dig into the numbers, and there's a couple of academics in Australia who've done a lot of research on it, and this is a few years old, but the numbers are pretty sobering. There's an estimated, I think, 3 trillion of illicit flow. The direct costs of anti-money laundering are $300 billion a year, and it intercepts $3 billion. So unfortunately, AML is one of the worst ROIs of anything. And the burden falls upon everybody to not really stop any of the bad money, except this small amount. But I suppose it would become even larger maybe, if it's not there. And it's again, a wicked problem. And hopefully technology is going to help solve that. We're going to have faster ways of meeting KYC obligations to ensure that we can prove that we're honest. But it's a little bit Orwellian to be in a world where you need to prove you're a good actor before you can do things, versus how we might have been used to be growing up in a world where it was assumed that you were, innocent or a good person until something negative had come in. AML flips that around, and that when you see people run up against that, they get really have a very emotional response to it, because it's like they're being challenged and said that they're a bad person, and being forced to jump through hoops for no good reason. And there might, the policy people who put it in clearly think there are good reasons. I only see that data from the academics and go, economics was my other degree, so I look at that and go, I think we could do a better way of approaching this. But
it makes me think of productivity and the productivity problem.
Exactly.
You're now looking at Australia from overseas. We all here are hearing about the Productivity Commission and complaints about the government and the way it's not addressing productivity. So is this digital economy all about improving productivity?
I think it is, because
it sounds like it.
The velocity of money is a great phrase.
Yeah.
Ooh, it's exciting. Money's moving faster.
The speed
but that's
with which
honestly
it goes through your pocket
if you can
out the
speed
other
up the flow of money,
side.
that is the blood that flows through an economy. So moving it faster from people at lower cost means people can do more with it. So every day that you slow down transfers between people in banking means a day that a startup is not getting its funding through, a day that a shop is waiting on an intermediary to settle up the credit card payments, a day somebody's making money on it by just putting in an overnight money, and they like it. But speeding that up is obviously, bad actors benefit from it, but I have a feeling that the good actors benefit vastly more, and the economy can really benefit from that. And that's huge. So even then being able to access these interesting yield opportunities online with automated contracts that have a cost of far below what the traditional finance world offers. It means that traditional finance will get sharper on their fees, because they'll probably sit on top of some of these products sooner or later to just look after it and say, we'll check it and make sure these work well, and you'll pay a little bit for that, but fine. People are happy to do that. It's a free market, but the more opportunities people can have, it's tremendous. You're creating more choice and more things that could be done, and allowing people to do it faster is great. I mean, the invention of the automobile, allowing people to travel faster than a horse, did so much more for sharing of information and making business go faster, and email going off, even faxes and letters, sped up everything. Well, everything can go faster.
It's sort of almost an economic revolution, because
correct.
I include myself in this. It's easy to fear the effect of AI. It's easy to fear the insecurity, as it might be perceived, of crypto, or the lack of sort of understanding of it relative to what we know best. But it's all maybe because we don't know what comes next. We don't know what the productivity gains are. We don't know what we can be doing when we're not doing that. So it's a fascinating revolution that's going on. You and I, at the age we're at, we would have heard about the Industrial Revolution, all these things in our history, and but this is a revolution of its own.
Truly is.
It's absolutely, and it's sort of galloping at a speed where it's almost impossible on a daily basis to keep up with what's happening and to understand.
That's right. I thought crypto was moving fast, but AI makes crypto look like it's standing still.
But they're related to each other as well now, aren't they? I mean,
there's so much interlocking. So many crypto projects have AI angles to them, because you write code with AI now. So many companies have just shifted to writing so much code with AI that, of course, they're going to be very centric on that. And it makes a lot of sense. If you can have the AI tie into these smart contracts and do these kinds of things, it opens up the world. And if AI can then assess all these options you have, find the ones that work for you, because everybody has their different preferences and businesses have different ways of doing things. We're at a really exciting place where businesses can customize the technology they use like they never could. That's what I say to people when they say, I don't really understand where AI will end up. I say, well, what do you hate about the software you use now? Everyone will happily complain about something. It has a really crap interface here. That's bad. I go, cool. Imagine you could fix that. And they go, that'd be nice. I go, well, you can just fix it now. And that's one of the biggest things of AI. And crypto ties into the payments piece so nicely on that. Because without that, it just doesn't work. The banks don't move at that speed. So they literally just don't. So you can't have an AI agent saying, I'm going to make payments from a bank to do this kind of trading. You can only really do it in crypto, which is fascinating as well. And the banks may see that and go, oh, well, we might want to put a little bit of a wrapper of our own around that and offer it as a product. But I mean, even from paying for insurance every day instead of your annual payment. Opening up those kinds of micropayments that could be done there. I remember having a discussion with Treasury once and said, wouldn't you like to get the GST when the money goes through the point of sale?
Instead of like 6 months later.
And they're like, what do you mean? And I said, well, what if the point of sale was a smart contract and someone paid in stablecoins with a card and the GST went out immediately? And then you knew, because you got the GST, you knew how much that store sold that day because you had the data. And you literally could have a dashboard of the economy. If you knew every coffee shop in Sydney, how much their coffee sales were this morning, and you were sitting at Treasury, you would know if a recession was coming. If you had a dip in morning, because one of the, there's a lot of study on what do people stop spending on when they get worried. Coffee's one of the number ones. So if you saw a dip in the coffee sales and went, what's going on? Because right now the delay in information is still very big. But crypto, because it's so transparent, can do some things like that. And that's a perfect example at government level of why should they care? Because that information is so good. Imagine if they said, we'll only take half the GST immediately, the other half later, or we want to do a stimulus. Okay, we're not even going to take the GST for a week to just support these businesses because we're seeing a dip. The early intervention in economics is a massive multiplier. By the time governments come around to doing stimuluses, it's a big hammer trying to solve the problem and it's very expensive. So the efficiency at government level is something that I sometimes think about, and I don't think it's thought. There's probably smarter academics who are trying to do it, but that's a huge productivity unlock, and that's alongside things like AI, because you got to have the data. AI is great, but if you don't have the right data, what are you going to do with it? And some of those crypto payment systems are just phenomenal because the data isn't tied into a payments company; it's there, and it could be real time, which is really fascinating. I think that's it's a little example, but you could do that in almost any business, and then.
Amazing.
Yes, there's an Orwellian monitoring issue, but knowing that and being able to help the economy, I think you could probably get the productivity gains and efficiency gains from a government at a level that's, just in insolvency alone, I did a number of years in insolvency. And who's the biggest creditor? The tax office. If the tax office could know when a business is hitting trouble earlier, there is a dislocation of businesses going into insolvency sooner, but in many ways it's good because the government isn't just subsidizing it running its last 6 months into a hole and then writing off a huge amount of money that they're never going to recover. It's effectively a subsidy on businesses that are going under. So if you could get those businesses identified right at the start so
and then help them if
they could either be helped or move to liquidation very, very quickly, that's a benefit because then everybody who worked there can go to a different job. They don't have the trauma of am I going to get paid or not? And the investors can move on without getting as burned and it's out of its lease. Another shop can come in there instead of everyone's getting a bit funny. What's going on? So there's a huge efficiency that can come out of this.
It's not an unemployment issue. It's a re-employment or a re-engineering of jobs that people are going to do.
There's going to be a huge amount of that. On the AI side, I personally believe that we're rapidly heading into a world where the people who love what they're doing are the A team. Everybody else is the B team. And the people who love what they're doing and love to use AI to make their jobs better are the ones everybody's going to want. And the people who've been turning up to punch a clock, turn a handle, do something, those are the jobs that are much more easily automated by AI or by a robot with AI that can do that job. Lawyers and knowledge workers are apparently under threat from AI, but if you care about what you're doing, the AI makes you a multiplied resource for your clients. It's if you're turning up and just going, I'm just here to do my 6 hours of discovery and go home. Oh no, the discovery was just replaced by AI. But if you were the person who went, I could just do all this work in 30 minutes with AI instead of all day, I'm going to do that and make it better. It's a real shift. So I think there will be a very interesting changes to come, and all these things are generational, right?
I was just thinking. I've had $5 in pair of jeans pocket for the last 4 weeks. I haven't found a single scenario in which I would spend it, because everything I pay for, I pay on my phone. So after what you've said, I'm sort of imagining that the Apple Pay credit card that I've got there now is somehow going to be replaced or be something else that is a source of money that we get paid into and pay out of. Is that sort of where this might go?
Quite probably, because I've noticed that coming back. Whenever you pay for something at a shop and you pull out your credit card, the amount on the machine is different to the amount on the wall because of the credit card fees that are passed on.
Exactly, yeah.
And they're surprisingly high. Funnily enough, on Cayman, cash is very heavily used.
Is it?
Because the banks have nasty fees when you're paying with cards.
Okay.
So there's a dual currency model there. So US dollars are accepted, so is Canadian dollars. But I think it's about $1.50 or so when you use a card with Canadian dollars, and it's about a 2% surcharge when you use US dollars. And that seems to be enough that everyone just goes to the bank and gets cash. But it's weird because I'm not sure that's too different to what people are paying on credit cards here.
Yeah.
But people have become so attuned to it that they just do that. And certainly traveling around in just being, even in London a couple of weekends ago, so many stores were, we are a cashless store, we are a cashless store. I was like, that's fascinating, because I had about 40 quid, and I was like, I'm going to spend this 40 quid. It's been sitting at my passport case for a year. I was like, oh, I can't spend it anywhere because the coffee shop's there. I'll go over to this burrito place. Nope. So there's a lot of places that have just eliminated cash. I know there's some politicians here saying, no, it's bad to not have cash. We should bring it back.
Yeah.
And we should make sure it's a thing. But Australia's dropped off in cash use, very, very fast. I think the UK is also up there with Australia in reducing cash use. But it's interesting how Australians will tolerate those fees or not think about them.
It's almost like the entities that are charging them are completely unaccountable. But I guess that's what the RBA has been on about recently.
That's right, interbank charges. But it's when you go to, I guess it's even more like sort of markets and things where people have little signs up.
Yeah.
Where we've seen places that had discounts for cash. In the old days, it made you think, are they paying their taxes if it's a discount for cash?
Exactly, yeah.
But nowadays, you look at it and go, oh, they just don't want to pay the credit card fees. Or they're happy to get a bit of a discount because if you ask them, they go, it's because we get charged so much on FPOS or whatnot. So crypto, at a minimum, is going to help be pushing those costs down.
Absolutely.
Well, it's just a lot of them are in credit cards at the moment. So a lot of credit cards funded by crypto still doesn't help the end user buying the coffee getting slugged an extra credit card fee.
Exactly. So there has to be enough consumer momentum to say, well, that's not okay. But the RBA seems to be trying to do that.
Yeah, and Australia, I think, has a pretty good history of regulators coming in going, hang on a minute.
Yeah.
Let's make sure it's fair, because we have an oligopolistic market and a lot of systems. So it invites regulator oversight to say, well, hang on a minute.
That's right. But also the logistics company, I think, can't remember the name of it, that delivers cash.
Armaguard, I think.
That
I was shocked when I saw those going out of business because there isn't enough cash delivery.
Exactly.
Yeah,
that's just incredible.
That was a big sign of the amount of cash just falling off a cliff in usage. It's very interesting when you see that drop down, because you're right, it puts you in a position where, well, if the payment companies jack up the fees, then suddenly everybody's getting clips taken off, and that's not great.
And crypto is a bit of a competitor to that model, isn't it? That's
effectively, yeah, because if someone's willing to just take stablecoins, then the transaction fee is pennies. It might be 30 cents, it might be 50 cents.
So how long before they do that? Like, what's the market dynamic that's going to cause us to start saying, I'd rather have a stablecoin?
It's a network effect problem. Yeah. So there's some people who've built point-of-sale systems to take crypto and use the phone to pay. But it's a network effect. Do enough stores want to put that in there to be able to take the payment? Like FPOS has a pretty amazing reach. So I think as we start to see stablecoins spreading more, it's like the little graph which I had, which maybe you could share with your viewers, where we've gone from 2021, the stablecoin issuance was tiny, and now it's up to 400 billion, right? Which is still nothing in the overall scheme. So it's still growing, and it's 35 trillion of volume this year, and 5 years ago it was barely anything.
But you showed me that, and it's gone in that sort of accelerating curve because there have been a number of collapses, and then the Genius Act in America comes in, and then the regulator here comes in. And so is that, there seems to be a sort of series of past disasters, and then the governments have said, well, we need to regulate
there's only really one major one that saw dips when you had the FTX collapse, Terra Luna, which was an algorithmic stablecoin. So there's one dip in issuance, but I think that what has pushed it up more is traditional finance recognizing how useful it is and how fast it is to do payments internationally. I brought in at Piper Alderman ways that we could accept payments in crypto, and it was the overseas clients that used them.
Really? And because it did actually happen?
Oh yeah, we took lots. We took heaps of payments. We had a few other partners who wanted to start taking them from their overseas clients, just because, like we discussed earlier, it would take ages from the banks. There would be problems. And you didn't know what new problem would prop up today with your international payments. You just knew something would go wrong. It's just a bit of a worry on that they don't work smoothly. And this completely avoided that problem. And we never held volatile crypto. We used a product that charged 1%, which is expensive, but next day clearing into the bank account was tremendous. And I think that product took 20 different kinds of crypto and just converted it straight away to money.
Wow.
But most of the crypto people paid with was a stablecoin. Stablecoins will continue to grow because they are just a really good value proposition. They cost hardly anything to move money. They behave just like regular money, but they act in the same way as you paying with your phone or just transferring things around that way. So I think they will keep growing massively in the institutional space as well, because that's where days of payment delay really matter.
Yep.
Because you're talking about large sums of money where it really makes sense on overnight interest. So of course they have a huge incentive to go into it. But then normal businesses that rely heavily on international payments also say, well, if we can shorten our payment cycles, it's just more cash flowing through the business. It is just increases the value.
What about for consumers? How does stablecoins become sort of mainstream accepted on the mainstream?
Well, I have a feeling that the credit card companies will probably be moving in there. As we discussed before, I don't think reserve banks want to do it.
Yep.
I think they're afraid of being accused of being Orwellian and tracking people. They could track people in other ways. So they prefer to have what I'd call commercial bank stablecoins, which we've already had in Australia. NAB and ANZ had their own stablecoin projects. And some of the Australian stablecoins actually came out of those teams that left after they were shut down.
Oh, really?
Yeah, they did them, and then there was a bit of that hostility around crypto before the Trump administration came in and made things friendlier again towards crypto, that banks got nervous on it. And they were actually getting closer to rolling out crypto, more close than many people know. And then it was pulled, which is really unfortunate, because Australia would have been world leading if the banks had got behind it, because they also could have managed the risk elements probably a lot better than most and been more trusted by people to do it. But it is what it is. So I think that credit card companies have a huge network. So they're extremely well placed to say, oh, wow, this is going to kill our model unless we start using it. And so I think a lot of the traditional businesses can come in. They know the margin will drop, but they have a defensible network. So they can then reduce the prices over time, but still maintain a profitable product, have all the checks and balances, have the trusted brand to do it.
And be first mover in a sense.
I mean, MasterCard is one of the sponsors of the Digital Economy Conference that I've just been at this morning. So that gives you an idea of the card companies are already in there. They see the threat. They know that if they don't do something to be in the stablecoin game, it will cut their lunch, because people will be able to get hold of essentially. I mean, I was over in Miami Consensus, and one of the stalls was literally handing out a little really cool clear card, and it had the antenna and the chip. It wasn't a credit card, but it had your crypto on it, and they had a little terminal, just a small one. And they said, oh yeah, our terminal's like $89, and we're trying to give them to businesses for free so they can accept stablecoin payments using this card system. And we've made it open source, so anyone can make these cards, because we're hoping to make our network of payment valuable. So they're all struggling with the network effect, but the credit card companies have got the network effect. Yeah. So I think they will bring it out for retail people, again, in a way that feels like it is now. But as long as it's under the hood, and a lot of crypto, like explaining how it works is kind of like someone explaining electricity 100 years ago. And then you'd go, well, you don't care. You flick the switch and the lights go on. We've got the amazing lights in here. They work. I don't need to know how the electricity flows. And that's where we know it's worked perfectly, when you're just going, I'm just making a payment and it just works. And under the hood, the software will take care of what needs to be taken care of. You get the value at the end, I get the thing that I'm buying, and we all just paid less for it, and we're all being more productive as a result. That's sort of the end goal that will be really handy.
So I've got one sort of major last question, really, which is the propaganda question of, the dark web and the web and the power of money being concentrated in the few, especially around Bitcoin and some of these coins, and people who are investors in the coins reading stuff that they would say might be trying to influence them to buy more because it's the few at the top just trying to feather their own nests. Have you heard of that? Or do you have friends that sort of think it's all very mysterious and deep and dark versus, no, it's all pretty well regulated and pretty well monitored?
I suspect there's more market manipulation that happens in the traditional financial markets when you look at the prices of shares just before closing, with the movements that happen in some of the stocks. Liquidity in markets is never great.
Yep.
Right? And we see that on the ASX, you see it on the NASDAQ. It's the biggest capital markets in the world that are the deepest liquidity. You still have shares that have terrible liquidity. If you have weak liquidity, you have opportunities for people to manipulate. If you have deep liquidity, it's very hard to manipulate.
Yep.
Something like blockchains that are, and particularly Bitcoin, that are entirely traceable for every transaction, if somebody wants to try and manipulate it, it's going to be fairly obvious and just more and more discoverable with AI. So I don't put on a tin hat and take those, someone's controlling it all and, manipulating the market up, and there's, Tether is the biggest stable coin, right? And it's completely unregulated, trying to become regulated. It's also the most profitable company in the world by employee count. insanely profitable because they don't give any of the users the interest they earn on the underlying reserve.
Yep.
And they buy American T-bills. So they're getting T-bill rates on, as of this year, what's the number? $250 billion of underlying reserve. So they're making billions of dollars a year in interest, which doesn't go to the holders of Tether.
Yep.
Goes to Tether, the company.
Yep.
They're actually buying up networks so that those networks, like mobile phone networks and operators and distributions to who will then adopt Tether and help the adoption of it. So I think that most of the people who were in crypto originally were actually in it for altruistic purposes. Yes, there's a bunch of bad actors who are there to do rug pulls.
Yep.
Traditional finance has a bunch of sharks who are in there to make money.
So that's just universal.
It's just the nature of humanity.
Yes.
There are the people who stick around, and we've seen that through what people call the crypto winters. You know, when the going gets tough, the tough get going, and some people stay there and keep building, and you see them there, and they're there.
Oh, it's a little bit like now, isn't it, with Bitcoin at $60 US?
Yeah.
Yeah.
But the people who are building and trying to make something valuable over time, they stop looking at the market prices. They don't care because they go, no, I'm building something better that I believe in. And that's what good businesses and good entrepreneurs are doing. They say, we're getting to a better place. We're going to build a better mousetrap. And the world will have a better mousetrap and be a little bit better. I'm going to make the world a better place. And that's sort of like a common theme of a lot of entrepreneurs. And then the people who are just like, I'm just here to make money. You know, okay, there's plenty of those. But they exist in all markets. So I don't think there's a grand conspiracy around these things. And some people say, oh, Bitcoin was created by the NSA in some way. Nonsense.
Yeah. That's what I'm just trying to verify when I talk to friends.
The market is too liquid and deep around that kind of stuff. Is there manipulation in it? Absolutely, because it's a free market and there are still liquidity crunches that happen and still situations where there can be dislocation of price. So are there people out there trying to arbitrage stuff or take advantage? Completely.
In crypto. Traditional markets as well.
It's a different kind of manipulation. Because in crypto, you might have a market that's so thin you could actually get enough of a token to crash the price, for example. And maybe you can take a short position somewhere else to profit from it. You can also do that in a regulated market. More chance of being caught here, perhaps under some kind of market manipulation.
Yep.
But as you know, when you read things in the AFR about, like I said, share prices that weirdly happen at the end of the day, there seems to be a limit of enforcement budgets to go after these kinds of low-level like manipulations where bits and pieces are done at certain times, and that's where markets close, right?
Yep.
The crypto markets never close, so arguably having no closing takes away an incentive to try and manipulate a price just before closing. You know, someone might try and bump their share price just before closing because if they can keep it there, it fixes the average, and that has something to do with their funding and other side benefits. In crypto, it's not like that. It's 24/7. So there's not really any benefit of trying to game the system at some particular time of day, unless you know that someone's clocking the price at a time of day for some other reason. But it's a fascinating experiment. And I think that world of crypto is always going to be there. It might be a bit smaller and crazy and experimental, but really fascinating things will come out of it. And the regular world will still be here. It will adopt some of the tech. And stablecoins are a perfect thing for it to adopt without having to have all the volatility of Bitcoin and other things that are scary. It can just bring huge savings. And countries having their own denominated stablecoin is super valuable. So things like the AUD is really, really useful. And there's a number of them out there. But it's really fascinating to see how they're working and how institutions are saying this is really useful for us to use. So the institutions always will come first. Retail will always come a bit later because it's just harder.
Yeah.
The network effects are harder.
Yep.
The technical support is harder.
Yeah.
Institutions have more money to put into it to say we can get these efficiencies that pay for itself. So it's a journey. So in 10 years, I don't even know the ability to guess. Given how fast AI is going, I suspect we will have a lot of agentic payments. And this is coming from someone who also still struggles with, I don't really see any agentic volume now.
So what's agentic?
That's where it might be you tell the agent,
so
if a price drops below this for
a
thing, use the money I gave you to go and buy.
Yeah.
Like a friend of mine just built one the other day. It took her a day. It would say travel agents replacement website where you can say, I want to go to Queenstown and go skiing. If the total price drops below this amount, buy it for me. Here's my credit card. And then her system will, if the price clicks under, will just buy it for you. Which is amazing because you don't have to go check every morning to go, airline prices go up and down, and there's ways you can see that, but because that doesn't exist. And she thought, I'll just make it. So AI lets people just make things that they've never been able to make before. And she's a legally qualified person who's admitted as a lawyer, not a software developer, self-taught on AI. Like you can just do things is the catch cry on Twitter that with AI. So in like 15 years, the world will look so different. But hey, the world looked very different 15 years ago from where we were all sitting.
Because when you and I last saw each other, which is 12 years ago, You
Was it that long ago? Coffee?
Yeah, I think so. Blockchain was the thing that I heard most from you. So what's the next edition of blockchain or the next evolution?
Well, like I said, it's going to end up like this: the plumbing or light switches, like that. The infrastructure that's still being built now, I think, in the next few years will become increasingly in the background, and lawyers will still be doing it, but in the same way that financial services lawyers deal with it, and other people just don't care. They go, "Can you get this thing done for me?" And the lawyers go off and do it. So what will be? I think AI will continue to be a massive thing for the next 5 years. I think stablecoins will still take 5 years to get proper retail adoption. AI will probably speed it up.
But they're on the way to being adopted in a retail sense, aren't they? Now,
big time.
Now they've been underpinned by the recent legislation.
Yeah, and as that continues, well, I mean, Genius Act isn't deployed yet, but the US moving in that way to say, yep. That's huge. That leads entire global markets. As the US does, everyone else follows because it's so big. So we can't help but follow in that way. And there is a risk if countries don't have their own sovereign stablecoins that are regulated but not over-regulated, so they're not too expensive, that like small countries near America will end up with dual currency models that people will say, can I just pay in US dollars? And businesses will go, sure, because it's so cheap to do so.
Yeah, well.
And the computers will work out the exchange rate so you can calculate your tax and other reporting and go, fine. So there's a very interesting, and part of some of the people's theories of Genius Act and whatnot is a pitch to say the US dollar is a reserve currency of the world, and that benefits the US a lot, which gives them a very big incentive to try and own stablecoin space, because if the US dollar is remaining stable and continuing to be used elsewhere, then having that is very, very good for the issuance of further debt there. It's very good for US companies. But I think that countries need to ensure they have their currency as digitally accessible, because that will be defensive to people saying, well, it's really hard to transact in the New Zealand dollar, so I'm just going to do everything in US dollars because it's just simpler. And that's an interesting, we'll see where that's going, but we might see that kind of currency wars jumping up as regulators understand it more, going, well, actually, we don't want people using foreign stable coins in here. We want to force them to swap into local currency. I bet we'll see some countries doing that.
The Digital Asset Framework Act that you referred me to earlier, is that Australian legislation?
So the Australian legislation coming in on that is for the exchanges to be licensed.
But not for stable coins themselves.
There is an element of stable coins in there.
Yeah.
And I think it still needs to be fleshed out with a lot of the guidance. So again, it's all about, is the regulator going to be welcoming to this and saying, how can we enable this tech and give Australians more choice?
Yep.
Because if they don't have the choice, it's so easy to go off overseas where a lot more scams happen. That's one of the real big problems in crypto is traditionally, if you didn't have banking rails, the scammers couldn't get in.
Yeah.
But crypto makes that easy. So you have this real problem that, well, if you don't have the choices available, people can go to a dodgy choice, which is far more questionable. Now, they could end up at an overseas regulated one that's fine. And all the major exchanges have overseas regulation as well, so they can still do that. But a lot of the scams that have been perpetrated on Australians were, people promising that they could get rich and quick, but they just had to send them this money and they had to do it in Bitcoin or a stable coin or whatnot. And once it left Australia's jurisdictional boundary to whatever the wallet was, enforcement became extraordinarily difficult / impossible. And that's been a real problem for people being preyed upon, and unfortunately people who want to get rich and quick or think they can, make money fast. It's a real problem around that. But equally, the problem is never before have entrepreneurs been so upwardly mobile and internationally mobile that they can just get up and leave. And we've lost a lot of the Web3 talent in Australia because, and I saw it happen while I was working here, so many just said it was too hard. The regulator was not helping them in any way. A lot of people were, very naive. They'd never done it before. So they went into the regulator and was like, here's what I'm doing. How can you help me? And the regulator said, we can't give you legal advice. You should get legal advice. Oh. And they go see some lawyers. They say, well, we could go talk to the regulator, but we don't really know what this is. So it's all really vague. And I had one that famously, they got up on stage and said, we went to Germany and in 5 days we had a letter from BaFin, the regulator, saying what you're doing is fine. And they said we couldn't get an answer in 10 weeks with $50,000 of lawyers in Australia and the regulator. They just wouldn't say anything to us. And so we went somewhere where the regulator just said, yeah, it's okay. And that's a cultural shift in regulators to be able to say, this is okay, and know they're not going to get fired if it turns out to not be okay. And Australia has that challenge because we kind of have that British approach where a lot of regulators and people inside there are not incentivized to approach it in that innovation-centric way. except in their sandboxes.
It's like policemen.
Yeah, they much more view themselves as a policeman doing good and keeping people safe and say, well, our sandbox is over there and that's the innovation section, but you've got to tick a bunch of boxes to get in there. And for a long time, crypto didn't tick any of the boxes enough to be in the sandbox. It just didn't work. So you've had this mismatch of regulation. I'm hoping the digital asset framework for Australia is going to give enough of a framework for the exchanges to have the right standard, and it'll reduce the number of exchanges because it will increase the red tape and spending, and all the lawyers are licensing lawyers.
Barriers to entry.
Basically, barriers to entry will go up, but it will still leave Australians with hopefully a bit more certain choice, and some of the smaller exchanges will get knocked down. And it's probably not the worst thing for that to happen. All markets go through that journey of that consolidation, and that's fine. But my only worry is we'll end up with internationals in Australia because they're so big and they have the benefit of having licenses everywhere. And you won't have as many homegrown, because we've seen, Independent Reserve was bought by IG. It would not surprise me if we see in the next 12 months a number of other Australian exchanges get bought.
So we're not still yet on the... Are we going in the direction with the digital asset framework towards the Genius Act? It's towards it, but nowhere
No,
near.
the Genius Act is far more complicated.
Is it? Okay.
I think that a lot more of the stuff for the Australian regulation is going to be at the regulator level. So ASIC will give the guidance and set a lot of those rules, which can be very, very useful if it's done the right way. Also can be very challenging if they're set wrong. So obviously there's a huge benefit of having it flexible at the regulation level versus in legislation. So hard to change. If you get it wrong here, you've got problems. If you get it wrong here, it can change, but the attitude's got to be right here and the leadership's got to be going in the same direction as industry. And then there's, of course, the tension of, well, just because industry wants it, we're not going to give it to them because we have to look after consumer protection as well. And the industry thinks consumer protection is being done, but we have other views as to the bad side effects. So I don't envy the regulator's job. It's a really hard job, and there's some really great people who've been in there, particularly in the last 2 years, working really hard to understand the industry. And Australia didn't have that for a long time. And ASIC and Treasury got some amazing people in who really took the time to get it, know how the technology worked and understand it, so that they could make sure that the rules that came down, which industry may not like, they may not like the final policy settings, but at least they work. And it wasn't like
so it's
America.
Things can happen.
Which America used to have, it was just impossible to comply, and they just didn't even pretend to make it possible. They say like, all you have to do is register, and they'd say you can't because you've got 100 questions that don't make any sense to what we're doing. And they just said, well, I guess you can't do it then. Which is not a very good answer for people. But so it's good for Australia to have that. It's where the whole world is going. With digital asset regulation. Japan's just bringing in something to treat them all as financial products / securities and make them all look like stockbroking things. So that's going to push a lot more maturity into the space, which is on net a good thing. It's not as fun. It's not as edgy and exciting, but on balance, I think that's where it was always going to go. So some of those really original hardcore crypto libertarians probably don't like it. But it's I think it's probably necessary for retail people to be comfortable with it.
And what about our students, university students? What are they going to be looking out for in terms of the courses they can do to learn about this, or is it there's just too much of a gap between traditional education?
No, it's not too much of a gap.
No, but is it creeping down into?
No, it is.
Is it? Yeah.
Well, that was one of the reasons I wrote my book was because there wasn't a book for it. So. I don't know the exact number of universities that have it. I think it might be 6 now. But it's been picked up by a bunch and it's in their blockchain courses. I suspect AI courses might be eating the lunch of blockchain courses at the moment. But a lot of people interested in tech and a lot of the universities offer great blockchain courses under their law degrees. So it's already been in the universities. That's why it's a generational shift. People coming out of university who just have a level of knowledge that I didn't have when I graduated university, and regulators may not have now. And so getting that education right early as the people then move up, it's in the same way that I've always thought law firms won't really innovate and evolve until they're hiring computer science law grads who, as they rise through the ranks, just improve everything because they know how it works, versus doing the folks who didn't like maths, so they did law. Arts law people are not going in as a computer sciencey person. And so therefore they're never going to improve the system because they don't know how, because they were never taught it. And that's fine. It's just how it is. But if you see that generational shift who come out with the knowledge, it might take 5 or 10 years. But once they move into these positions, they just natively know how to make it better. And therefore they can. I mean, I had a view at Piper's that was, I was not the managing partner, but I had a view that all the law firms should be hiring comp sci law grads nearly exclusively if they wanted to transform
To do legal jobs or to do
No,
computer science
just to
jobs
transform and be a
within the
really
firm.
good law firm in the future. Because if the lawyers are not tech savvy enough, then the firm will fall behind. Because you'll just end up with the traditional models breaking of law firms buying big pieces of software that cost a huge amount of money, and then lawyers try and use them and they only use half of them and they don't quite fit. It's a really challenging model, but getting people who understand how to solve problems, because law is solving problems.
Absolutely. Yeah.
We joke that to clients. We say we solve problems, often legal ones.
Sometimes.
And so, sometimes
In
legal
family
ones.
law, it's even less than often.
Because so much of law is more,
it's just
is
all about-
dealing with people and trying to resolve conflict and trying to
Exactly.
negotiate stuff. And AI can't do that very well right now.
No.
But that's a huge part of law. But all the other stuff that we could automate should be automated so that we can focus on the valuable parts for our clients. And then that's going to give our clients the best outcomes and let us help the most people.
So AI is not going to put us out of business.
If anything, I think it'll make a whole lot more work for lawyers, particularly with the people thinking that AI is going to do a good job for them, and then it'll come.
No, they still need to check.
And the number of lawyers who are putting in hallucinated stuff in court is a bit scary. I wrote an article on that the other day about how many cases are being reported around the world of lawyers using AI irresponsibly, or even just innocently and not realizing how it can get things wrong.
Yeah.
I was always trained in the world of you check all your citations before the submissions go in.
Yeah.
And I don't know how many lawyers were not trained in that world, but it seems like quite a few. Certainly in America, it's a significant problem.
Reading the case is a good idea too. To check the actual proposition works, because I think there's some
There's a bunch of those, yeah.
people have just, the case doesn't exist or the citation's wrong.
The quote's wrong.
Exactly. And the actual case does not exist.
Or that terrible case with the consulting company that put a quote from a federal court judge here who never said that.
Yeah.
And it's just,
I know.
oof, that's those kinds of things are teething problems with AI. And I think there was a few cases in the US where the sanction was the lawyer had to tell any judge he appeared before that he'd been sanctioned for not checking his citations properly.
Yeah, wow.
So that for 2 years, so this poor lawyer would either have to sit out on the side for 2 years and not do any real litigating because not to have to tell the court, or disclose that to the court, which would immediately make the court scrutinize I thought it was a really great punishment, because it's like he will not put anything to the court that he has not personally checked, because if that happens after he's told the court that he got in trouble for that, then his career is toast.
Yeah,
but
that's right. Clients are not going to trust you anymore.
I don't understand how it's so prevalent in America. The hourly rates they charge. How they're not checking this, how they don't check the citations themselves, it's giving lawyers a bad name over there. But a friend of mine's a judge in Canada, and he said it's really bad in self-represented immigration cases.
It would be,
because they just come in with the self-represented litigants trust AI even more because they don't have any reference point of the law, and they come in with their own submissions and all this stuff that's just wrong. And the problem is it's falling on, it's a totally different podcast, but the burden on the courts of dealing with the AI slop is huge.
Well, I think there's also another thing. Members of the bar in New South Wales would regularly now be receiving, via their solicitors, AI-produced summaries from their clients. And it doesn't save them any money for us to read that. We have to read it, we have to check it, we have to integrate it. Frequently I will find that 5 to 7 page output is just meaningless, or I'm there. So it's, at the moment, the friction is in potentially increasing the cost of the client.
Correct.
With the expectation that we would read it and assimilate it. So
my trick is to put a page number limit, which courts already do on submissions, and I think that was done many years ago to stop the kitchen sink being thrown in on submissions.
Yeah.
But certainly for any of the members of the bar watching this, tell those solicitors they get 2 pages. That's it, 2 pages. Because they can use AI to refine it down. That's the crazy thing. You could just literally tell the AI, that's a wonderful 7-page brief for counsel, make it 2 pages. And it'll just go, no problems, and then it'll make it 2 pages. And then you could probably have a second agent check the citations. And in fact, I have had my AI check the citations of counsel who've done opinions for me, and in 1 or 2 cases found the citations were incorrect.
Really,
Which is, it's amazing when AI picks it up. And then I would still go check those citations myself manually before it would go to a client, because that's how I was raised, and if I know the case, and obviously I'm fairly new to the Cayman, so I'm checking every citation because it's all usually British law. But even in Australia, I would check those unless I know that case.
Yeah.
And if you know the case, you know the citation as well. Law has a whole bunch of things you need to remember.
Yeah, exactly.
No one's going to fake a call to bank.
I got an email a few weeks ago. It was just like every paragraph was number 1. So there's 10 paragraphs and they're all number 1. And to me, it's like a very clear signal that somebody's just produced something and sent it off without checking it.
Another little giveaway is a lot of the AI tools don't do page numbers.
Really? Okay.
So
if
anytime I get something from a
Yeah.
client or an opposing counsel that has
Yeah.
no page numbers on it, I go, this is the AI tell.
Yeah.
And when you start reading enough, and I'm sure
Yeah.
barristers pick it up as well,
Yeah.
you kind of your brain starts to recognize
Yeah,
the AI style.
absolutely.
And you go, oh no, they've done this again. And but you're right, it
but
doesn't
I've got to
help.
read it now.
But
Yeah.
I'm honest with clients.
Yeah.
If they say, can I send an AI brief? I say, yes, but it won't save any time and it may take more time.
Exactly. That's
Because
what I'm
I
finding.
just
Yeah.
not the primary documents. I just want the primary.
Because you also don't want your
answers.
own mind to be distracted or
Correct.
taken off down a path that in fact is not the way your mind works. You want to be able to focus on the question the way you do
Correct.
rather than be distracted. Anyway,
Exactly.
these are all things for us to maybe talk about another day.
Yes.
Thank
My
you.
next trip to Australia.
Thanks
Now, the
so
AI
much.
side
Yeah.
is so fascinating and
Yeah.
really exciting, but it's
Yeah.
been a pleasure to be on.
My-
Thanks for having me a little bit over time.
My pleasure. Thanks so much. Lovely to meet you.
Cheers.
Again, I should say, because it's 12 years or something.